This is Horizon's Middle East and Africa. Our top stories this morning. Equities extending losses as uncertainty over Fed rate cuts and stretched valuations in technology stocks weigh on sentiment. We hear from former Manchester United star Rio Ferdinand on how he's turned his focus to investing in sports businesses. And today's Big Take finds Africa needs 1 billion jobs by the end of the century, but where is it going to find them? We'll be live in Johannesburg with the details. Well, it's just gone 9 a.m. across the Emirates. It's 4 p.m. here in Sydney. I'm Paul Allen in for Jemana Biseche. Let's take a look at how markets are tracking on the final trading day of the week in the Asia-Pacific Middle East. We've got S&P futures a little bit weaker, off about 0.1%, following on from the big sell-off that we saw the previous session in the United States. We're also seeing yields creeping up a little bit. We heard from a number of Fed speakers, which suggests, well, maybe the end is nigh for the Fed easing cycle. Certainly the next meeting in December looking like a coin toss. Neil Kashkari said he didn't support the last cut, saying the economy is resilient. He's not sure about what to do in December. Alberto Mussolem, meanwhile, saying he needs to proceed with caution. There's limited room for further easing without monetary policy becoming overly accommodative. So in this environment, we see gold continuing to catch a bid. A lot of nervousness around the AI narrative, which we've seen spill over into Asia. We'll get into that a little bit more at the moment. Oil creeping up a little bit, 63.88 for a barrel of Brent. Now, there's a few factors at play here for the oil price. We was heading for its third weekly loss on signs of oversupply. Of course, the IEA forecasting a record surplus for 2026. But look at that big jump towards the right-hand side of the screen there. Ukraine having a major drone attack on a Russian ship and an oil depot as well. And we also have a U.S. carrier group about to arrive off the coast of Venezuela, and President Trump has been presented with military options about what to do as tensions continue to rise between the two countries. Well, let's check in on how markets in Asia are faring, and Min Min Lo is in our Hong Kong studios. So Min Min, we had a lot of data out of China today as well, so modest beat for retail numbers, not so good on the industrial production side, however. Since then, though, we've had a trade deal struck with the US. Any scope for an improvement here?
The trade deal in the U.S. certainly is something that would bode well for China's export data moving forward, and we could continue to see the bifurcated economy in China, with retail sales perhaps looking pretty weak, but exports and industrial production probably remaining the main driver. But here we're taking a look at the broader Asian markets. We can see a little bit of a pullback here across Asia. A couple of factors at play, right? We have the U.S., a big sell-off among the tech giants there, that momentum continuing in Asia. If you look at the Kospi, the biggest drags were SK Hynix and Samsung. It's leading losses in Asia here. TSMC as well, declining and pulling down the TAIEX. You flip the board, as you said, we are looking at the Chinese economic data looking pretty weak, especially the big standout here is fixed asset investment declining by 1.7% versus the 0.5% decline the previous month. Retail sales 2.9. This is the weakest number we've seen in more than a year, and also the fifth consecutive month of decline. And again, industrial production falling below 5%. Again, a worrying sign here. And you take a look at how markets are digesting this, Paul. Actually looking better than other markets in the region. It's falling, yes, 0.7%, but better than what we're seeing in Korea, for example. Dollar yuan largely unchanged as well. In fact, we're headed for the seventh straight week of gain of the yuan against the dollar. The PBOC is sending the message here that they're keeping the fix strong and not depreciating the yuan as a means to stimulate the economy.
All right, Min Min Lo there in Hong Kong. Thank you. Well, Federal Reserve Bank of Minneapolis President Neil Kashkari says he didn't support the central bank's last cut, as I mentioned a moment ago. He does remain undecided heading into that December meeting. And he's arguing that available data suggests more of the same for the economy. And he joins a great number of Fed officials who have recently expressed skepticism over the need for another cut in December.
We need to proceed and tread with caution, because I think there's limited room for further easing without monetary policy becoming overly accommodative. I believe policy right now is somewhere between modestly restrictive and neutral. We need to continue to lean against above target inflation while providing some support to the labor market.
When I look at both of those things, on balance, I think we need to remain somewhat restrictive to continue putting pressure to bring inflation down towards our target.
Well, for some more analysis, we're joined by Ayesha Tariq, Macrovisor co-founder from Dhaka in Bangladesh. So, Ayesha, thanks for joining us today. I do want to start on some of what we've heard from the Fed, a little bit of maybe a coin toss. Maybe it's not going to happen at all for a rate cut in December. And if we take a look at this chart, it indicates that bets of a rate cut are receding. Now, we've got data coming after the end of the US shutdown, but it's kind of incomplete and patchy. I mean, what are the risks here of setting Fed policy in a data fog?
Hi, Paul. Good day to you. So I think the risk is that the Fed eases too much, right? So what we're seeing right now in the market is quite a resilient economy. If we look at earnings, we've got double-digit growth in earnings coming back. And then on the other side, what we're seeing is inflation starting to creep up. In fact, many of these companies had obviously pulled forward, stocked up, and they didn't pass on the cost of tariffs to customers, right? But now we're coming to a point where they could actually start passing these costs on because they've taken a hit to their P&L a little bit, and the timing is right for them to start passing on costs and for inflation to start creeping up higher and higher. Now, this might be a one-time cost, but as Fed Chair Powell explained last time, that it could be a lasting cost. And so the Fed has made quite a few mistakes in the past, unfortunately, and I think this time they're treading a little bit more carefully given where we stand with jobs numbers and inflation. And all of this comes at a time when we don't have a lot of data on what is actually going on.
Yeah, you're certainly echoing the sentiment of a lot of Fed speakers when you talk about that sticky inflation, and maybe we put a question mark over jobs. But overall, the economy is looking pretty strong in the US. Asset prices are healthy. Does this really look like an economy that needs the support of a rate cut?
So in many ways, no. And that's perhaps why the Fed is thinking twice about this December cut. Now, if you remember, September was a very close call. And then I think in October, he was very, very clear that, we may not get a cut at all. He did blame it on the data void, but I think there are other factors, things that we just talked about right now. I think one thing that was a little worrying about the market was liquidity. So we've seen some of the liquidity come out of the market, even though stocks have been going up. However, they've solved that problem a little bit by saying that we're going to end QT. And that in and of itself actually eases conditions quite a bit. So when we look at that situation, the Fed hasn't really stopped easing. They might pull back on a cut, but that doesn't mean they've stopped their easing path at all.
So can you tell us a little bit about what your portfolio allocation looks like in this environment?
Sure. So I am still bearish the dollar because even if the Fed doesn't cut in December, I think that they are on this path to easing, and that sort of puts pressure on the dollar. And I'm still long gold, by the way, in my personal portfolio and for clients. And that's because we think gold has this premium built into it. And all the uncertainty that's happening in the world also adds to that premium. So when we look at the entire picture, I think, gold still has far to go. And another thing that I actually like is China tech. So the AI race is heating up. I think Jensen Huang as well said that China may win the AI race. That may be going a bit too far. However, they are putting in place a lot of policies, and they have the government support to do well in the AI space. So I'm long China tech as well.
The AI space more broadly, does that look at all frothy to you? Do you buy the dips here, or do you see some signals that just kind of make you want to stand back and wait for a while?
So it is becoming a little frothy, and I think we've had a few investors in the last few days talk a lot about, bubbles. In fact, yesterday the news came out that Michael Burry, the famed investor of the great financial crisis, he closed down his shop because he had taken a bet against AI. Now, when we look at the space, obviously there are the good companies and there are the not so good companies, right? And we need to make a distinction between those. So even if there is some frothiness, I think the bigger companies have more than just AI going for them, the hyperscalers, I mean. So we need to, make that distinction and then, tread carefully in that space.
All right, Ayesha, thanks so much for joining us today. That is Ayesha Tariq, co-founder of Macrovisor. Still to come, former footballer Rio Ferdinand says younger fans are consuming content differently and the industry must adapt to retain their attention. We'll have more with that interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. Former Manchester United star Rio Ferdinand, who has turned his focus to investing in sports businesses, says the way younger audiences consume football is reshaping the industry and companies need to adapt fast. Ferdinand bought a stake in one of the Middle East's first Arabic-language digital football apps, Cora Break, last year. Speaking to Jumana Baseche, he also discussed growth in the Saudi market, as well as his move to Dubai this year.
I can't lie and sit here and say that wasn't a factor, but I think there's no way that I could sit here and tell you as well that just because of those reasons, policy or tax, that's why I'm going. No, there's no way I'd have gone anywhere just for those. It had to be like a whole plethora of different reasons as to why I was going to make that move. And again, family is at the heart of all of the decisions that I make. And so, again, this is an adventure. Listen, who knows how long we're going to be here? Like, I'm really enjoying myself now. The energy is fantastic here. And like I said, my children are really happy. And so, but I can't put it down to just one aspect.
Do you expect other Brits to follow suit?
They are already. I think I'm late to the party, it seems. but I think people, again, looking for different reasons, they're going to make these moves. And no two people have the same reasons for going anywhere.
Yeah, and you've obviously had an extremely illustrious and successful career as a footballer.
Thank you.
And now you are in, I guess, the second phase of your career, which is with the launch of Ferdinand Group, and that is a sports and entertainment company. Talk to us about the types of investments that you're looking for the group.
Yeah, I've got that, but I think that's just my media company, Rio Presents, which hosts Rio Meets and different podcasts. My football agency and commercial agency, New Era, as well, which are really thriving. And again, it's just, I'm from a football background, and that obviously encapsulates sport as well. And we want to speak to that. And new media is exactly the way to do that. And talking to people directly, seeing it from the horse's mouth and being a part of that culture and the ever-evolving culture as well, and that landscape's moving quickly. And just being a part of that and being at the curve of it, because I've been used to doing linear TV, which is great, and I just wanted to step out and have that freedom and that capability to kind of move and expand and talk in a new way that I think is being consumed very differently to the way when I first started 10 years ago. And that's why, again, I invested in a company in Saudi called Cora Break.
Yeah, I was going to ask you about that. So we reported on that last year.
Yeah, because
multi-million-dollar investment.
Yeah, and everyone was saying, well, what you do? It's just a fast-growing place. It's a we've seen with all of the investment that's going in there now, but in terms of media, football, sport in general, it's crazy the growth there and the ability to kind of go there and really get into that market. And actually, because I'm coming from where I'm coming from and my background, there's a lot of value I can add in that.
Yeah, so that deal got a lot of attention because it was, I believe, one of the first times that you had a foreign investor invest into local Saudi fintech startup, right, or fintech platform. And typically what we've seen in the region is money going outwards as opposed to investment locally. Do you think there is enough investment taking place at a local level to promote, grassroots sports endeavors?
Yeah, I think that's something that is coming. I think the first, obviously, tranche of kind of interest, money, investment, etc., was going to be to kind of definitely cultivate eyeballs come into the region and to say, look at what we're doing. And I think then after that is an underbelly of hard work and the real work that starts happening in terms of making sure that it becomes a sustainable economy in that sense, through sport. And I think what we see is the glitz and glamour, yes, but listen, I'm having a lot of conversations. I've been travelling to Saudi for the last 2.5, 3 years, and understanding the culture, the differences, but also the real intent to really create that underbelly of young, aspiring people from the kingdom who they want to really push and make people that everyone can be proud of.
Do you think bringing over Ronaldo galvanized football in the kingdom? 100%.
I mean, he's obviously a wonderful footballer, so it makes sense in that capacity, but his reach, his ability to kind of shift industries with either even his investments or when he applies himself to a certain trend, people follow. There was no players, real big players going to Saudi. Cristiano Ronaldo makes a decision one day to go. All of a sudden, there's an influx of players. That shows you he can move a market.
Yeah, and you expect that to continue in coming years as well.
Yeah, well, they've got the World Cup now in Saudi, so in 2034. So to have that, there's going to be a huge lead up to that. They're going to invest heavily into that, I'm sure. But I think it'll be smart investments. Listen, people can say that it's been extravagant, but sometimes you have to really, really invest high at the beginning to really get the gains and to really kind of stabilise yourself to a point where actually you can make good, better decisions in the later years to make great decisions for the country and for that product when it comes around.
Yeah. Well, you've successfully made that transition from professional footballer to businessman, investor. Is it incumbent on all athletes today to be thinking about what they're going to be doing post-retirement and to have that business lens?
Yeah, I have this conversation with a lot of young players and a lot of players that are coming towards the end of retirement. And I kind of saw in my generation above me, a lot of players were really reactive to retirement. So when they retired, what do I do? What do I concentrate on? And
because the adrenaline stops, right?
Yeah, and then there's pressure to maintain a lifestyle. Then there's pressure to find something to fill that void. And then you maybe make decisions that aren't the right decisions when that pressure's on. So I made a conscious decision at around 27 years old to kind of start putting things in place. I started a restaurant, my foundation that's been going 15 years now, my media company, various other things. I had about 5 things that I wanted to do that when I retire, I can walk straight into any one of those businesses. And that's what happened. And so I had a choice. The pressure was alleviated because of that, and I'm making better choices because of that now, and it's put me in a position now where I'm in a much better place than what I saw as examples previously. So I tell the young players now, like, get your football right first, or whatever sport you're in, get that right, make sure that's working, and you understand how to really put out tip-top performance consistently. Once you get to that stage, you can actually, then your focus can actually drift a little bit here and there, interests that you're into. But you just never want it to get to a point where there's an imbalance where that's taken over what's really your bread and butter. This is your home run every day, your sport, your football.
Yeah.
The other stuff is extracurricular.
Don't lose the focus, but prepare for the future.
Yes.
Now, there's something I want to touch on that you mentioned earlier, which is the importance of perhaps digital presence, and you, in your own most recent ventures, broadening out the scope of where you speak to your viewers, right? So now you have your podcast, and you have these platforms where you interview some other famous athletes as well.
Yeah.
Do you think perhaps today there's too much pressure on young athletes to also have a digital presence because they're sort of exposing themselves to a lot more scrutiny than they would have, say, back in the day?
Yeah, I think there's good reasons to want to have been a player in this generation because the finances are just huge now compared to when we played. We were well paid, don't get me wrong, but it's another level or 2 or 3 now, which is great. But coming with that is that pressure of social media, and there's some good with social media, but there comes a lot of dark sides to that. The immediate responses that are there, negative, always, they don't go away. It's at your disposal all the time. It's at the fingertips through your phones. It's there for everyone to see. So you never get away from it. Whereas our generation, if it was on a TV station or in the newspaper, one day it's gone. But now it's there forever, and that's a huge pressure to take. So the layers of skin, the thickness of skin that these guys need to maintain the focus and the ability to kind of deal with that pressure is of a different scale to what we ever had to deal with. So
what advice would you give them?
Don't consume it, or teach yourself to look at it and delete as quick as you can. Now, that's really difficult for a human to delete negativity aimed at them. But if there's anybody out there, that's not a bad business, I don't think, to get into, if you can help young people especially do that, not just football players.
That's former Manchester United footballer Rio Ferdinand there. Still to come on the show, Citi's CEO and chair says the group is growing rapidly in China. We'll hear more from Jane Fraser a little bit later on Horizons Middle East and Africa. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. Anduril Industries' Edge Group are launching a joint venture to build drones in the UAE. The move marks deeper American collaboration with the Gulf nation's military-industrial base. Edge will invest about $200 million to form a manufacturing facility with Anduril in Abu Dhabi, with production for autonomous drones planned to start by the end of 2028. Bloomberg has learned Emirates is in advanced talks to order at least 30 of Airbus's largest wide-body jets. The move signals a shift in the carrier's long-standing criticism of the quality of engines made by Rolls-Royce. An agreement may be announced at the Dubai Air Show starting next week, though successful completion of the talks isn't guaranteed. Didi Autonomous Driving has reached strategic collaboration with the Abu Dhabi Investment Office to support the Emirates Smart and Autonomous Vehicle Industries cluster. In a statement, both sides said ADIO and Didi will work on sectors including autonomous driving technology innovation and application, as well as AI talent development. Both entities say they aim to transform Abu Dhabi into a leading smart mobility transportation ecosystem, while gradually expanding the cooperation to the broader Middle East region. The Financial Times is reporting Aston Martin chair Lawrence Stroll has reportedly explored a deal with Saudi Arabia's public investment fund to take the car maker private. The publication says discussions were in the early stages, but Aston Martin said in a statement the company was, quote, not in talks with PIF about being taken private. All right, let's take a look at how futures are tracking for the US. Kind of flat at the moment, picking up a little. We saw a fair bit of selling in the last US session. We've got stocks futures, meanwhile, for Europe off by about 1/3%. Dow futures also flat, and we'll see if the tech-inspired sell-off continues into the next day in the United States. Still to come, Africa's economic growth push needs 1 billion jobs. A booming fertility rate and a lack of sufficient jobs could be holding the continent back. This is Horizons Middle East and Africa. Our top stories this morning. Equities extending losses as uncertainty over Fed rate cuts and stretched valuations in technology stocks weigh on sentiment. Former Manchester United star Rio Ferdinand speaks to Bloomberg TV on how he's turned his focus to investing in sports businesses. And today's big take finds Africa needs 1 billion jobs by the end of the century. Question is, though, where's it going to find them? We'll be live in Johannesburg with the details next. Well, it's just gone 9:30 a.m. across the Emirates. It's 4:30 p.m. here in Sydney, and I'm Paul Allen in for Jemana Baseche. Let's take a look at how some of the key assets we track are going at the moment. We're just seeing S&P futures picking up a little bit of ground. They're pretty much flat, let's call it, at the moment. Yields have been ticking up, however. The fate of the next Fed meeting in December seems to be standing on the edge of a knife. Could go either way, but the expectation that we'll see more easing has been fading. A couple of speakers that we've heard from, including Neil Kashkari, he said he didn't support the last cut and the economy is resilient. Now, against that backdrop and also the selling that we saw in tech in the US and spilling over here into Asia, is seeing gold catching a bid again, not quite touching those record highs that we saw a month ago, but hovering just below that $4,200 an ounce mark. Crude picking up, could end this week on high if we keep going the way we are, just below $64 a barrel. Seeing a bounce there on geopolitical risk. We have had a major drone attack by the Ukraine on a ship in an oil depot in Russian territory. Also, we have a US carrier group about to arrive off the coast of Venezuela, so geopolitical risk causing that tick up in oil prices despite that lingering narrative of looming oversupply. Well, let's check in on how Asian markets are faring at the moment. Min Min Lo is in our Hong Kong studio. And Min Min, as we might have expected, not a great day for tech stocks.
Yeah, not a great day for tech stocks. We're seeing pullback across Asian equities, especially the AI plays, the Kospi, TSMC, all pulling back today. But I want to point out this terminal chart here. It shows you Korean bond futures taking a swan dive. Take a look at where we are. We are close to the levels last seen back in June 2024. And remember, this is before the BOK had started the easing cycle. And interestingly, the government had just pledged to take some actions to stabilize the FX moves. We did see the Korean won flirting with the lowest levels we had seen since 2009. We're seeing that reversing today. The Korean won strengthening against the US dollar. Last I checked, about 0.8%. But that is not enough to turn the sentiment around, especially when it comes to bond futures here and tighter liquidity at the end of the year, perhaps piling pressure on bonds as well. But flip the board, we are digesting the macro data coming out of the Chinese market here, and we are seeing the market action quite muted, I should say. Yes, it is declining 0.8%, but not as much as what we are seeing on the Kospi and the other regional benchmarks here. And it seems like markets are shrugging off a little bit, and some economists are saying maybe the bad data is a good thing for stocks, especially when it comes to implications for policy moves. We're seeing dollar yuan unchanged as well. The PBOC has been setting a strong fix of late. We're heading for a weekly gain when it comes to the yuan, but a quick snapshot at how the economy is doing. Take a look at the macro data. We're seeing big decline here. The fixed asset investment down by 1.7% versus a 0.5% decline the previous month. Retail sales 2.9%. This is the weakest print in more than a year and the 5th consecutive month of decline that we're seeing. Industrial production as well below 5%, which is very concerning. It shows you that not just external demand for exports are declining, but also domestic sentiment and consumption still very slow as well.
All right, Min Min Lo there in Hong Kong. Thank you. Let's get to Africa now, and the continent needs 1 billion jobs by the end of the century in order to galvanise its economic growth. With booming fertility rates, finding economically productive workers is not the issue, but it's rather whether those workers are going to be able to find jobs. And that depends on how well nations are able to strengthen education and healthcare systems, also implement policies to boost job creation. So for more on this, our Chief Africa correspondent Jennifer Zabasaja joins us from Johannesburg. So Jennifer, tell us, what's the crux of the opportunity here for Africa?
That's right. It's very interesting if you take a look, Paul, at what we've heard from experts over the past few decades. There's been quite a bit of debate about the potential opportunity here for the continent as far as this demographic dividend pertains. If we just take a look at what we've seen over the past few decades in population, the continent back in the 50s accounted for just under 200 million people. And we've seen that population double to just about 1.5 billion people. And the expectation is that at the turn of the century, that will increase even more so to 4 billion people. And you pointed to some of the reasons why we're seeing that. We are seeing improved access to medical care. We're seeing declining infant mortality rates, and then also persistently high birth rates. And compare that with what we're seeing elsewhere in the world. And I'm looking at Europe and Asia here. And so really the potential is quite huge, not just in terms of population growth, but there's also really an opportunity that experts point to in terms of the continent being a powerhouse agriculturally and also in the manufacturing space. Over the past few years, we have seen African countries and different cultures really boom globally in as far as arts go and the film and TV space. And so the potential here is huge. But as you were mentioning there in the intro, there is a fine line between when this is a potential and potentially when it's not.
Yeah, let's talk about that a little bit more. Can you unpack the concern here for economists?
Sure. There really is a fine line if you take a look at it, because, of course, we have seen this demographic dividend be beneficial for a number of other countries, in particular China. But again, if we do, in fact, though, see the population growth without the economic stimulation, it could very much be a liability for a number of economies. And what we've seen from experts, they actually point to quite a bit of data that helps back that up. And in particular, if we look at the ratio of working age population to dependents, that is a key metric that will really help illustrate whether or not this is actually an opportunity. If we take a look at East Asia in particular, they were able to see a lot of economic success because they created a number of jobs in addition to this rapid industrialization that we saw in parts of the world. The concern here is that potentially African countries move a bit slower than what we've seen elsewhere. And if that does happen, we could continue to see some of the issues as far as, low unemployment and poverty actually enhance if we don't see this economic balance happening. And so there's quite a bit for a number of countries to focus on in terms of making sure they're attracting the right capital into the countries, ensuring that there are jobs, and ensuring that this population is not just well educated, they're also well trained for a number of the jobs that are going to be needed. And so the potential is there, the opportunity is there, but it is going to be a very delicate balance. And luckily, a number of countries on the continent can look elsewhere across the world to see potentially what to do in order to ensure that they are maximizing the potential here.
All right. Thank you, Jennifer Zabasajit there, our Chief Africa correspondent in Johannesburg. Now, ahead of next week's G20, Bloomberg is hosting global business leaders and policymakers in Johannesburg to discuss how global investors are assessing the continent's biggest opportunities and risks. Bloomberg TV's coverage starts on Tuesday, and Jennifer's going to be hosting an audio live Q&A on Bloomberg.com on Monday. Digital subscribers and terminal clients can put their questions directly to a panel of Bloomberg experts in real time. Visit Bloomberg.com/liveqa for more details. Well, Citi Chair and CEO Jane Fraser says that she's keeping an eye on the US labour market as well as private credit, but adds she isn't worried right now. She also spoke to us about the US economy.
I don't think we're out of the woods yet, and there's a sense that there may be another shoe to drop. It could be in tariffs or in the labor market. It could be in the asset prices that are quite high in the States. But all of that said, we're quite optimistic about 26. The challenge for the Fed right now is with the government shutdown. We all have a dearth of up-to-date data, which we could do with. It's hard to make these calls of exactly what's going on whilst we're waiting for the information. But as we look further out into next year, I think the resiliency of the corporate balance sheets, the strength, companies leaning in to innovation, investing in AI, there is, I think the doomsdayers will be proven wrong.
We're a couple months out now from when we had concerns rise about, I think there was one of Tricolor, the subprime auto lender. There were failures. There was concerns about non-performing loans. What does your balance sheet look like as far as that, and where is your worries lie?
Our balance sheet is pristine, but I think part of that is because it's very heavily investment grade on the corporate side. We're over 80% investment grade globally, and when we look at the consumer side, it's about 86% prime. So we tend to see the most resilient, healthiest parts of the economy on the balance sheet. All of that said, we haven't seen a thing that is concerning us. The consumer in the States is being fiscally responsible. Companies have been building up some more cash, either for a rainy day if it proves necessary, but most of them for investment. And they're acting from a position of strength. We'll keep an eye on the labor market. We'll keep an eye on some of the areas of mid-tier players in private credit and the like. But as far as we're concerned, that second, third order effects, the bank's not seeing anything that we're worried about.
That was Jane Fraser, CEO and Chair of Citi. Now let's take a look at some of the other stories that we're following. President Trump is expected to return to Davos next year, signalling warmer US-Swiss ties as both sides push to finalise a new tariff deal. According to sources, Trump is preparing to travel to Switzerland with a large delegation for the World Economic Forum. Trump didn't attend this year's meeting, held shortly after his inauguration, and instead spoke by video link. The BBC has issued a formal apology to President Trump over the misleading edit of the US president's speech in a documentary program late last year. The BBC did, however, reject Trump's demands for compensation and said it would not rebroadcast the documentary on any of its platforms. BBC Director General Tim Davie and Head of News Deborah Turness both stepped down days after the controversy came to light. Michael Burry's Scion Asset Management has terminated its registration status with the SEC. According to a filing on the SEC website, the change took place on November 10. The deregistration raises the possibility that Berry is shuttering his hedge fund or closing it to outside investors. A March filing said the firm had about $155 million in assets under management. Still to come, a whole lot of luxury housing projects being built across Nigeria are attracting the attention of regulators. We'll get the details of that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. Now, a flurry of luxury homes with multi-million-dollar price tags are sprouting up in major cities across Nigeria. Developers are racing to meet demand from Nigerians abroad, taking advantage of a weaker naira, and locals seeking to preserve wealth. But these flashy properties have also started to attract the scrutiny of anti-corruption agencies in a country grappling with extreme poverty and a severe housing shortage. For more, Bloomberg's Ondera Oganga joins us from Kigali in Rwanda. So, Ondera, what are you likely to experience if you land in Lagos now and you're looking for a property?
Hi, Paul. So what you're likely to see is that the old colonial bungalows are being replaced by new glass towers. Initially, Banana Island was the place to be. It was considered the gold standard of luxury living. Now it's looked at as old money territory. New money is coming up in enclaves like Alexander Avenue in Ikoyi. What you're likely to see there is modern condos, high-rise apartments, penthouses, and these are the properties that are coming up and are attracting a lot of attention. The architecture is sleek, it's modern, it's tech-friendly, and it's located in waterfront areas. And it's attracting a slightly new and younger demographic. People between 35 and 40 years old, they're working in government or they're working in tech, and they're looking for properties either as homes or investment. And that's where it gets interesting, because these houses in Lagos go for at least $1.5 million all the way to $10 million. And if you're looking at Abuja, you need to have at least $3 million. Comes together with mixed development used as an ecosystem. Hospitals, schools, supermarkets. And part of this boom is because the country revised its GDP and we saw real estate's value triple. It actually surpassed oil and gas, and that's one of the reasons why we are seeing this boom in it. Another one, according to Bloomberg economist Yvonne Mhango, is during Tinubunomics, the country devalued their currency. Coupled with high inflation, investors are looking for a place to park their money to at least preserve some value. So this is some of the reasons why we are seeing this real estate boom in Nigeria.
Yeah, and this activity is now on the radar of anti-corruption agencies. Tell us about their concerns.
Absolutely. 1 + 1 is supposed to be 2, but in Nigeria's real estate sector, 1 + 1 equals $1 million. Now, the math doesn't add up because this is a country where minimum wage is less than $50. Only 2% of the population earn about $140. So how are they affording these top billing homes in the country? And that's where the anti-corruption agencies and the financial crime unit come in and say, because of strict anti-money laundering laws abroad in Europe and the US, scrupulous individuals are now looking at Nigeria, and real estate has become fertile ground for illicit financing. And they're saying that these individuals are using things like shell companies companies and foreigners as fronts to buy these properties. And during raids by the government, we've seen 700 duplexes recovered from former central bank governor. Others who've been indicted on charges of corruption with money in real estate include former oil ministers, accountant general, governors. And while this dirty money is finding its way in real estate, it's pricing out ordinary Nigerians. Rent prices have doubled. People have to move farther and farther outside the city to find affordable housing, and first-time buyers cannot afford the houses, coupled with the fact that mortgages are scarce, highly priced, shorter repayment terms. And what we are likely to see is that in a country where high net worth individuals have reduced by half in the last decade, oversupply is likely to hit the market, and this bubble could burst sooner than we think.
All right, thank you. Bloomberg's Ondero Oganga in Kigali, Rwanda. Now let's take a look at some of the other stories that we're following. Chinese President Xi Jinping will not join the Group of 20 summit next week. That decision will come as a blow to host South Africa, that's already facing a boycott by US President Donald Trump. Xi's decision means the summit, created to address geopolitical and economic issues and are typically attended by heads of state, will lack the leaders of the world's two largest economies, as well as fellow member Russia. South Africa's rand strengthened below $17 per dollar for the first time since February 2023. Stocks and bonds, meanwhile, rallied, and it came as investors applauded a midterm budget update that included a lower inflation target and an improving fiscal outlook. The rand gained as much as 0.8%, hitting its strongest level in almost 3 years, on expectations the central bank will hold interest rates higher for longer to subdue price increases. Coming up, Indian Prime Minister Narendra Modi's alliances are leading in exit polls from the elections in the pivotal state of Bihar. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. Indian Prime Minister Narendra Modi's alliance is leading in exit polls from elections in Bihar, one of India's poorest yet politically pivotal states. A win for Modi in Bihar could be a big boost for the Indian leader after a year marked by economic headwinds and foreign policy challenges. For more, Swati Gupta, Bloomberg's government reporter in South Asia, joins us now from New Delhi. So, Swati, how big is Modi's lead in the exit polls?
Right now, we are looking at the early trends, it's actually quite big. Modi, along with alliance partners, have very easily crossed the halfway mark that they need to form a government in the state. And the opposition is trailing behind by a huge margin. So that is right now, at this point, reversing the trends is going to be very difficult. So we might see a little bit of give in the numbers, but to a large extent, it's going to stay where it is.
So can you tell us a little bit about the significance of the state of Bihar in national politics?
So Bihar serves sort of as a microcosm for North India. The politics in the region, the parties that run the state are very significant in northern India. It also is a state that has a very strong regional party presence. So Prime Minister Modi's government in New Delhi is leaning on outside support from the regional party in Bihar. So a victory in Bihar solidifies that relationship that they have. And at the same time, Bihar, with its massive population, which is equivalent to what the entire population of Mexico is, sends a huge number of parliamentarians to New Delhi. So in bits and pieces, Bihar becomes electorally significant for any party that is contesting there.
Ahead of this vote, we also heard from the Congress leader, Rahul Gandhi. He was raising some questions about electoral fraud in a different state. Is there any evidence of that happening in this election?
So the opposition has been claiming for quite a while that there has been manipulation of the voter rolls in India. And at the same time, voters are either being cut out of the list or extra ones are being added, which would be very beneficial for the ruling party. both the ruling party and the Election Commission of India, which is the primary polling body in India, have denied these allegations, and no action has been taken to address the accusations. We will have to wait and see if the opposition again comes out with similar accusations for Bihar, as they have done for previous state and for the national elections in 2024. But right now, the voter turnout has been incredibly high, higher than Bihar has ever seen, with women being the majority percentage in that turnout. So it is interesting that women are coming out in larger numbers in Bihar to vote.
All right, Bloomberg's Swati Gupta, thanks so much for joining us. Okay, just before we leave you, let's take a look at how some of these key assets are tracking at the moment. We've got S&P futures just turning positive now after what was a pretty brutal day of selling previously in the United States. We've seen a lot of that spillover in Asian markets as well. Euro stocks futures ahead of the open in Europe are currently looking a little bit softer by about 0.25%. We also seen yields rising as this narrative around Fed easing in December really seems to lose steam. A bit of a coin toss now, that meeting. Neil Kashkari says he didn't even support the last cut and says the economy is resilient. And the oil price could possibly end the week on a high note. That would be unusual. We do have the IEA forecasting a record surplus, but the price ticking up on geopolitical tension. That is it for Horizons Middle East and Africa. I'm Paul Allen in Sydney. Stay with us for Daybreak Europe. This is Bloomberg.